All right. It is very important for you to understand that every time your business grows, at some point it becomes inevitable or it becomes unavoidable for you to make the credit sales. Okay. So there are those times when you sell to your clients on credit. Now, listen carefully. If you sell to your clients on credit, then they fail to pay back. That is called a bad debt. Okay? The same is called a what? A bad debt. So therefore, a bad debt is an amount owing to a business which will not be paid back. It will not be paid by the debtor. That is what a bad debt is. That amount that is owing to a business which will not be paid by the debtor. We call it a bad debt. You're very sure that these, debtors are not going to pay you the amount. The bad debt nowadays is usually called irrecoverable debt, and you should write down this irrecoverable debt, signifying that this is the debt that you cannot retrieve, you cannot actually recover. It is actually the debt that you lose. So once you lose this debt completely, you can't manage to recover this debt. And this is basically what has happened. Okay. So now let's look at this scenario that we have just been given. Sometimes again, you can have a situation where you make credit sales, you sell to, your clients on credit. But of course, since you understand that some of the clients may not manage to pay back that credit, it is prudent for you to leave, a provision for the doubtful debt. The provision is just an estimate that you leave in your mind as you are recording to make sure that, you give that provision to say that what if some of the customers don't manage to pay everything? So that is called the provision for doubtful debts. So the provision for doubtful debt is actually that estimate. It is not same as bad debt. Why? Because bad debt is actual. You are very sure that these people are not going to pay back. The period has come to an end. For example, you sell to your client, then those clients, you just hear that they died. And actually, there was no agreements anywhere that you are going to recover that money from the third party. So you would account that as bad debt. But for the provision from the onset, you leave that, provision, that is to say that estimate that I think from all the money that I'm expecting from my clients, from the debtors, I think maybe this much or such a percentage may not be able to come back. So that is what you call the provision for doubtful debt. The provision for doubtful debt is also called allowance. Allowance for irrecoverable debt. Should write down these are the common and new words that are usually used. The allowance for irrecoverable debt. So in case when you're writing in an exam, you find allowance for irrecoverable debt, I've told you this is same as a provision for doubtful debt. It is also, even for bad debt as well is also called irrecoverable debt. So please, you have been exposed to the language, and that's very important for you to notice. So what we'll show you mainly is just to have you understand the nature of these irrecoverable debts and the recoverable date recovered. You don't understand what we mean by recoverable date recovered, right? Irrecoverable date. Recoverable date recovered or bad date recovered is still the same thing. What this means is that you had written down in your books that, you are not going to get this money. Then all of a sudden, after you had already forgotten, maybe five, there are those clients, you forget about them. You write as bad debtors, you write them off as bad debtors at the end of the period. Maybe after 2 years, they just bring back the money. They say, no, I owe you, 5 years ago. Now this is the amount I've brought the money. In such a situation where the person that you had already written off as a bad debtor decide to bring money, that is called irrecoverable debt recovered. So you have recovered the irrecoverable debt, or the bad debt has been recovered. So we'll show you how to record, how to make entries in the bad debt account and in the bad debt recovered account. Or in other words, we'll show you how to record in the irrecoverable debt account and in the irrecoverable debt recovered account. Then the other thing that we'll show you is just to, understand the purpose behind the provision for doubtful debt or the allowance for irrecoverable debt. And basically how you make entries to create and maintain these accounts. So that's what we just want to discuss. Any questions so far? Does anyone have any question? Okay. If at all there is no question, let's start with the bad debt recovered. Now, I've already said that the bad debt recovered arises when a debtor pays some or all of the amount owed after amount was written off as a bad debt. That's what I said. So how do you make entries? You debit the cash book and then you credit the bad debt recovered account. I've not heard of this. I'll repeat. I'm saying you debit the cash book in that case when a person has, when you have recovered the bad debt, you debit the cash book and then you credit the bad debts recovered account. Or on the other hand, you can still debit the cash book and credit the debtor's debit, the debtor, or debit the debtor and credit the bad debt recovered account. That is at the beginning of the period, but at the end, you can debit the bad debt recovered account and credit the income statement still. So that is to say, in the profit or loss statement, the bad debt account is always, the bad debt is always, it's always credited, right? Bad debt is credited. It is not debited. The bad debt recovered, sorry, not the bad debt. The bad debt itself is an expense, so it is debited. Expenses are debited in the profit and loss account, but the bad debt recovered is credited. We look at this simple example before us. It starts from here, and you should follow nicely. 13.1. He is a trader who sells goods on credit. He offers customers a cash discount of 2% if accounts are paid within 30 days. So there is a cash discount of 2%. The financial year ends on 31st December, and he sold goods worth $400 on credit to Bavans stores on 1st February 2022. So the account was settled by check on 28 February 2022. On this date, Bavine stores purchased further goods 150 on credit. You have not understood. I am repeating so that you get the question. Here is a trader, okay, who sells goods on credit. Actually, he even gives a cash discount to all those people that are going to pay within 30 days. The message to get is that this person's financial year ends on 31st December. Now, the very person has sold the goods that are worth $400 on credit to Bavine stores on 1st February 2022. Now, the account was settled by by check on 28 February 2022, which simply means number one, he sold, okay, let me illustrate so that you understand. He sold the goods worth for $400, and these goods were able to be settled within the same month. So this was cleared, eh? You sell to someone and then they pay back within the same period they under consent. So that's not a big deal. There is no bad date in here. Okay. This was just a normal date. You sell on credit, again, these people pay. Now listen carefully. The information goes on and says, on this date, the 28th of February, Bavine stores purchased further goods of 150. So after clearing the date, again, they get, the goods of 150. Now on credit, okay, they have purchased goods on credit. Let's see what happens. So now, attempts to recover the amount due have been made. So this person now who sold wrote off Bavine's stores account as a bad date on 31st December 2022. On 30 December 2020. You get. You sell to your friends for the first time, and again, they manage to pay back. They pay back within, actually, the month. Then the very same day, these people they are very crooked people. The very day after paying back, because they have enticed you, you have seen that they are able even to pay within short time. Now they get. After they got that amount of 150, they went for good up to December. December closes, okay? Up to December, they haven't yet paid. And then, that is in 2022. You close the year. You just write them as bad debtors, like, okay, we have lost this month. Now listen to what happened. The following year, in October 2023, after you in December last year, 2022, you had written this one as a bad debtor. See what happens. After 1 year, these people realize that this one is a good friend. Let's take back the money that we owe. Of course, when you write someone as bad debtor, you don't necessarily need to go and tell them that, okay, the money that you owe me, I've just forgotten about it. No, you just write in your books and forget. Then, so that those people, if they want, they can still bring the money. So now this is what happened. On 31st October 2023, which is the other year, after 1 year again of being written as a bad debt, this person decided to pay back the money, the 150. He has paid. So now, during the year that ended 31st December 2023, this person, Sachin's, the one who was selling, wrote off bad debts that was equal to 828. That was the total of bad debt. 828. The question is to write up the transactions. We write up, the following accounts in Sachin's ledger for each of the year ended 31st December 2022 and 2023. We also write Bhavan stores account, the bad debt account, and the bad debt recovered account. Pay much attention to the accounts that you need to write. You need to write the bad debt recovered account because there was a bad debt that was recovered of 150. Then there's also the Bhavan's account. There's also the bad debt account at the same time that was recorded in 2022. Yeah. In 2023, there was the bad debt recovered. And so you have to record and see what happens. See now what happens. I've explained the question to you. You have understood it. So how do you record in Bhavan's account, in Bhavan stores? Number one, let's start with the Sachin stores account. Yeah, the one who was selling. Okay. In the seller's account, remember, he sold to Bhavan's for 400. So we just record that he sold 400 the first time. Okay, that is on the 1st of February. Then on 28th of February, okay, he received the money. He received the money, the amount. Okay, he received the money. The total amount that he sold it was 400, but he received the cash there was a cash discount of what, 2%, isn't it? 2% of 400 is $8. So there was a discount that was given as he was receiving. So which means instead of receiving, okay, instead of Sachin receiving, receiving all the money, that's receiving 400, he received the money that had the discount, that was off the discount, that's 392. So he received 392. And then on the same 28th December, or 28th February, he made the sales, okay? Sachin's account made sales, of 150, okay? And the very year on 30th December wrote it as bad debt. So credit the bad debt account and then close the account, balance it off. So it's very simple. So the other way of looking at it so that you don't get confused, you can still look at this transaction from Bhavan's stores ledger, in the sales ledger. Let's pick Bhavan. What happened to him on 1st February? Easier to look at it like that. He received the sales, right? He received, because he received it from Sachin. Sachin sold the goods worth 400. So he's debited. Okay. Then on 28th of February, his account, Bhavan's account is being credited because he's paying. Now he's paying using the bank, using the check. Okay, that's why we write 392. And actually there was a discount of 2%, the cash discount, because he paid within the time period where the discount was active. So that's how you have this bank amount and the discount thereof. It is interesting to learn that on the very day, 28, again, he received now the goods worth 150. Okay, his account received that. Yeah. Since he received that, the account received all that, then what happened is that now you needed to balance off the account. You need to balance off the account. Of course, you have the balance of the bad debt that had been incurred on the 3rd of December, 2022. So there was that bad debt of that amount. So it's just that easy and straightforward. We have showed you how to record in the Bavans account. You also need to learn how to record in the bad debt account, the same transaction. How would you write it in the bad debt account for 2 years? Remember, we have 2022 and 2023. What is happening to the bad debt account? Every time you incur bad debt, you have to debit the bad debt account. So the bad debt account is debited, okay? The bad debt account is debited using Bavan stores of 150. That was on 30th of December. That's when the bad debt was written off. You debit the bad debt account, and then you balance off the account. As you're balancing off the account, there will be the difference. This difference is sent to the income statement. And on the income statement will be debited, of course, with the bad debt. You're not understanding. I am saying that look at the bad debt account. This is the one that you're looking at. We incurred bad debt on 3rd of December, so you sold on credit 150. Then you balance off the account. As you balance off the account, there will be this balance that will remain here. You will send it to the income statement, okay? The 150 shall be sent to the income statement. If you have credited the bad debt account with the income statement details, that should mean that the income statement should be debited with bad debt. And that's true, because the bad debt is an expense, and all expenses are debited in the income statement. That was for the year 2022. What about 2023? There is no balance brought down here. You don't bring down, you close the year, then you open the year on a new chapter. Now, how much of bad debt had been written off in 2023, 31st December? The total of 820 had been written off. This is what I've been taught. And then from there, you balance off the account. Then there'll be this difference that you send to the what? To the income statement again. So basically, this is how you just present your accounts, as simple as that. The income statement is receiving the total of 120 as bad debt in 2023. Now, how do you record in the bad debt recovered accounts? Remember, you also recovered some bad debts. How do you record in the bad debt recovered account? Remember, you recovered the bad debt in 2023, 31st December. You received some cash, okay, of 150. Yeah, you received this amount. And then what happened is that the account, which is the bad debt recovered account, was credited, of course, with the bank. That is the Bavan Stores account. Bavan Stores account, or the bad debt recovered account, gave some money. That is 150, like that. You balance off the account. Very easy. No need of suffering. No need of panicking. So basically, that's how you record in the bad debt recovered account. I've showed you how you can write in the personal account of the data. This is what has happened. That's in the Bavan Stores account. And then how do you record in the bad debt account and the bad debt recovered account? So it is very important and very necessary that you look for the means of, every time reducing this bad debt, avoiding the situation where these people are failing to pay back. Okay. Another question is this, a second example. Sachin financial year ends on 31st December. During the year ended 31st December 2024, he wrote off bad debts totaling to 950. Now the bad debt is totaling to 950. December, his trade receivables amounted to 25,000. So, oh, sorry, $25,000. That is what is the total receivables. Then he created a provision for doubted debt of 4% of the trade receivables. So 4% of this amount, 4% of this amount is actually the provision for doubted debt. Okay. So can you prepare a relevant extract of the income statement? We know that the income statement is also called the profit or loss account. And then we should prepare an extract of the balance sheet. So to start with, we start with the bad debt account and the provision for doubted debt account. So in the bad debt account, we are told that the total amount that had been written off as bad debt was what? Was 950. So you debit, every time you incur bad debt, you debit the bad debt account. And then you balance off the account. The difference is sent to the income statement. This is what I just said previously. Then now, for the provision for doubted debt account, what you do is that now you look at, you calculate 4%, of the 25,000. That's the provision for doubted debt account. The provision for the 4% of 25,000 should be 1,000. And this 1,000 is actually credited to the provisions for doubted debt account. And the details that you write are for the income statement, so that the income statement can be debited from with the provision for doubted debts account. The income statement will be debited if you credit the provision for doubted debt. So in this case, since you are looking at the provision for doubted debt account, you credit the provision for doubted debt account with the details of the income statement. Then the extract in the income statement is very easy, because you know that the bad debt is an expense. Just write this as an expense, and provision for doubted debt as an expense. Then when you go to the assets, we know, you and I know, that the provision for doubted debt, the total provision for doubted debt actually should be deducted from the receivables. Should be deducted from the total receivables. That's how you account for that in the balance sheet. Remember, the provision for doubted debt is only affecting the non-current asset, the current assets, to be specific, the trade receivables. So basically, that's what happens. So there are a lot of adjustments that can actually be done. What happens? So sometimes you can find that the same provision for doubted debt is increasing, and the same provision for doubted debt sometimes is decreasing. So when we pick it up from in the next conversation, we should look at a situation where now the provision for doubted debt is increasing, and when it is decreasing, and how to account for that. So basically, this is where we need to start from.